In recent years, Meta, formerly known as Facebook, has dominated the tech industry, with over 3 billion active users and a market capitalization of $1 trillion back in 2021. However, the company is currently facing a monumental collapse, with a slew of controversies and issues coming to light. From the Cambridge Analytica scandal to the recent massive layoffs, Meta has been embroiled in a never-ending cycle of scandals and criticisms. One of the major issues that led to the downfall of Meta is the introduction of its new metaverse concept. The company's focus on creating a virtual world where users can interact and socialize in a simulated environment has been met with skepticism from both users and experts. With a budget of $10 billion allocated towards the development of the metaverse, Meta seems to be putting all its eggs in one basket, at the expense of neglecting its existing platform's flaws and problems. Despite its dominance in the past decade, Meta's stock has plummeted by over 76% in recent years, with analysts predicting further decline. The company's reputation has also taken a significant hit, with a recent survey showing that only 12% of people trust Meta to do the right thing. So in this video, we will delve into the various controversies and missteps that have led to the downfall of the once social media giant. Facebook has a long history of being mired in scandals and controversies that have severely damaged its reputation. One of the earliest and most significant scandals was the Cambridge Analytica scandal in 2018, which involved the unauthorized harvesting of personal data of millions of Facebook users by a political consulting firm. This led to widespread criticism of Facebook's data privacy policies and its failure to prevent the misuse of user data. The Cambridge Analytica scandal was not the first time that Facebook had been criticized for its handling of user data. In 2011, the Federal Trade Commission, FTC, accused the company of taking advantage of their users by sharing their personal information with third-party apps without their knowledge or consent. As a result, the FTC fined Facebook a record-breaking $5 billion in 2019 for this and other data privacy violations. And the list of scandals doesn't end there. The revelations of Russian interference in the 2016 US presidential election through Facebook was a major turning point for the company. The Russian operatives had created fake accounts and pages on the platform, posing as Americans and spreading false information to influence public opinion. It was estimated that these efforts reached millions of people on the platform, potentially affecting the outcome of the election. This discovery sparked a congressional investigation into the matter and led to a public outcry for increased transparency and accountability from Facebook. The company faced criticism for not doing enough to prevent foreign interference in the election and for not taking down fake accounts and pages that spread false information. As a result, this event showcased the power of social media in shaping public opinion and the need for regulation to prevent such abuses in the future. However, it seems that Facebook still hasn't learned their lesson from the 2016 elections, as misinformation continued to flourish amidst the COVID-19 pandemic. During the pandemic, the company faced intense scrutiny for its role in spreading misinformation about the virus. False claims and conspiracy theories about the origins of the virus, its transmission and potential cures were widely shared on the platform, often leading to harmful outcomes. Some of the misinformation included claims that the virus was a hoax or that it was deliberately created in a laboratory. Other misinformation claimed that certain treatments such as hydroxychloroquine or ivermectin were effective against the virus, despite lacking scientific evidence. Not only that, very harmful ideas were also allowed to spread on the platform, such as drinking bleach could kill COVID-19. The repercussions of Facebook's algorithms prioritizing engagement over accuracy were dire, as false claims and conspiracies gained unprecedented traction. The spread of misinformation caused real-world harm, leading people to self-medicate with dangerous substances or neglecting necessary precautions to prevent the spread of the virus. The consequences of this negligence were deadly, as countless lives were affected by the rampant misinformation on the platform. Despite this, Facebook remained sluggish in its response, facing harsh criticism for its inaction and reluctance to remove false information from its platform. Despite Facebook's repeated assurances to reform and address the issues that have plagued it in the past, it still faces scathing criticisms and fierce backlash from users, politicians, and the media alike. In 2021, Facebook earned the dubious honor of being ranked as the most despised social media platform in the US, with a whopping 64% of users holding a negative view of the company. With its credibility hanging in the balance, the question remains whether Facebook can earn back the trust of its users and stakeholders, or whether it will continue to spiral into further decline. In an effort to distance itself from the negative reputation that has plagued it for years, Facebook made a bold move move by rebranding to Meta in October 2021. The company's new focus is now on the metaverse, a futuristic world where users can engage with one another and digital objects in real time. While this shift in direction was initially met with excitement, it has been plagued by concerns over privacy, data collection, and the monopolistic power that Meta could wield in this new digital landscape. In fact, Meta's announcement of its plans for the metaverse led to a massive drop in its stock price, with the company losing around $60 billion in market value in just one day. As Meta continues to push forward with its metaverse ambitions, it seems that it only further cements the collapse of the once social media giant. Despite the horrible reception, Meta's CEO Mark Zuckerberg is still eager to bet big on it. According to him, the metaverse will be the successor to the mobile internet, with the potential to generate billions in revenue. In fact, Meta has already invested $10 billion in the metaverse, and Zuckerberg has stated that it could eventually become the company's main source of revenue. Only time will tell whether Meta's bet on the metaverse will pay off. The company continues to face an uphill battle in regaining the trust of its users and stakeholders, and the success of the metaverse is far from guaranteed. What's guaranteed, however, is that the company will continue to face brutal criticisms and skepticisms in the near future. While it offers a new frontier for immersive and interactive experiences, it also raises concerns about privacy, data security, and the potential for addiction. Critics argue that the metaverse could exacerbate the already troubling trend of people spending too much time on screens, leading to social isolation and mental health problems. In addition, the metaverse's potential for hyper-targeted advertising and data collection could further erode users' privacy and autonomy. Furthermore, concerns have been raised about the environmental impact of the metaverse. The energy consumption required to power the servers and hardware necessary to support such a massive virtual world could have significant consequences for the planet. In addition to these challenges, Meta has been grappling with several struggles and controversies. For instance, the company has faced sharp criticism for its handling of misinformation and hate speech on its platforms. In April 2021, a whistleblower named Francis Haugen disclosed internal documents showing that Facebook, now known as Meta, was aware that its platform was being used to disseminate hate and misinformation, but failed to take adequate measures to curb the spread. The leak sparked public outrage and renewed demands for greater regulation of the tech sector. Moreover, in 2022, Meta faced an antitrust lawsuit filed by the US Federal Trade Commission, FTC, and over 40 state attorneys general after a federal judge rejected Meta's request to dismiss the case. The lawsuit alleges that Meta engaged in anti-competitive behavior, buying up potential rivals such as Instagram and WhatsApp to maintain a monopoly on the social media market. If Meta loses the lawsuit, it could be forced to divest some of its assets and potentially spin off Instagram and WhatsApp into separate companies. Not only that, Meta is facing a significant financial setback as Italian prosecutors have initiated an investigation that could result in the company losing a whopping €870 million or $925 million in sales tax. The prosecution contends that the free membership offered by Meta is in fact an exchange of services that involves the sharing of user data, thus rendering it subject to VAT sales tax under the law. If the investigation becomes a success, this potential ruling could further exacerbate Meta's financial adversity. The company's struggles have not been limited to external criticism and controversy. In November of last year, Mark Zuckerberg came to a decision that the company will be laying off a total of 13% of its workforce, which amounts to a jaw-dropping figure of 11,000 employees. This decision was made as part of a restructuring effort to make sure our future is strong. However, the future definitely is looking quite the opposite, as the company is planning to lay off another batch of its employees. Additionally, Meta has faced another uproar from its own employees over its handling of workplace issues, such as diversity and inclusion. In 2021, a group of former and current employees filed a complaint with the US Equal Employment Opportunity Commission, EEOC, alleging that Meta had a pattern of discriminating against black and female employees. The complaint also accused the company of promoting a hostile work environment and failing to address employee concerns. In conclusion, Meta's foray into the metaverse and rebranding may have been an attempt to distance itself from the scandals and controversies that have plagued it for years. However, the move has not been without its own share of problems, including criticisms of the metaverse concept and Meta's role in it, as well as recent struggles and controversies such as the massive layoffs, ongoing scrutiny over its handling of misinformation and hate speech, and not to mention the hefty amount of tax that they might pay. As of now, the company's future remains uncertain, with its stock prices continuing to plummet and its reputation taking a hit. With over 1.9 billion daily active users and a market cap of over $441.75 billion, the stakes are high for Meta to get back on track. Whether it can overcome these challenges and regain the trust of its users and stakeholders remains to be seen.